Hey folks, I've been on the road for like 3 weeks in a row. I can't wait to actually go back and work from my office. But I did want to show you what I think is a really important chart for perspective. We've seen risk assets, particularly parts of the equity market, financials, semiconductor stocks, give people, I think, some really warm and fuzzy feelings over the past 24 hours. But I do want to warn you that I'm not quite sure the market has, equity markets have, what it takes to really break out sustainably. And so one chart that I'm watching very closely is the relationship of small cap stocks versus large cap stocks. Very specifically, we're looking at the Russell 2000 versus the S&P 500. So it's IWM divided by the SPY. It's a ratio chart. A lot of platforms can do it. I use TradingView.com for that. And it's something we really heavily use in our process, and even in the Market Rover 2.0 coming up real soon. But that whole relationship of one asset or one ETF or one currency or commodity versus something else is really important. So let me just quickly show you what that looks like. So here we're looking at this very ratio that I just mentioned. So all I did is I took the Russell 2000 IWM and I divided it by the S&P 500, and you can see the real clear and persistent underperformance of the Russell 2000 versus the S&P 500, right? So it doesn't take a genius to see that. You can see that the Russell has been underperforming, quite dramatically. Now, we're watching this closely to see if some sort of a relative low has been hit, but so far I'm not quite sure we've seen anything. It's too early to call victory on that. But to me, more importantly, in order for risk assets to start pushing higher, I need to see some sort of, at least equal strength between small caps and large caps, preferably even an outperformance, and in order for the broad market to really push higher. But this continues and continue a persistent downside basically since, let's say the summer of 2018. It just really is reflected also in the broader risk assets markets that they're basically just going sideways or choppy to sideways. We've seen breakouts in individual parts of the market, but this I think is a simple chart that everyone can do, or most people can do on their ratios on their chart platforms and track. And so if you see this thing start to bottom out and break higher, then I think we have better chance of the market, broad risk equity markets pushing higher. But until then, I think it's really difficult. It's just mathematically a hard thing to accomplish otherwise. So that's pretty much it. So it's one simple chart you can watch. There's a lot of other stuff, of course, you could watch, but it's one of them that I watch very closely all the time. And until you see some sort of relative outperformance, or at least inline performance with large caps, by small caps, I think it's difficult to hope for a broad-based breakout in equities. We might see certain parts of the market, even semiconductors, have another small leg higher or so. But broadly speaking, I think it'll be difficult for equities to push higher. So hope this is helpful, folks, and I'll talk to you soon.